What's going on, high rollers? Welcome back. Another episode today here with Chandra from Portal DeFi. I'm with the Rollup, aka Rob, and we're here today to talk about what's going on in the cross-chain layer 2 swap world. Some really interesting things happening in the Bitcoin scaling ecosystem as well. Some interesting new operating systems, and just some overall kind of holistic takes on DeFi. So as always, excited to be scaling DeFi, pushing the limits on what's possible with this technology. So pass it over to Rob. Good morning, Rob. How you doing?
Brothers in DeFi, it is good to be talking to you on another podcast. Yeah, Andy, good to be back. It's the first episode we've done in a little while, so it's definitely good one here to kind of get back into our roots about DeFi and dig into Portal DeFi at portaldefi.com and hear from Chandra about what Portal is building, how they are supporting the DeFi ecosystem and solving Ethereum and in general decentralized finance scalability. Chandra, good to see you. Welcome to the show. And maybe you could tell us a little bit about how you got started in DeFi and your origin story that led you here.
Sure. Thanks for having me, Rob and Andy. I'm Chandra. I'm the founder of Portal DeFi. We got started in Portal because we saw a problem in the space where most of the activity that's happening was on centralized exchanges, especially cross-chain. And DeFi came out of that a little later, maybe a year or two after that, during the year 2020 or 2019 bear market, where a lot of interesting peer-to-peer contracting applications were built on Ethereum, and anything from lending, peer-to-peer lending, to basically staking. And all of these models have really expanded and got a lot of traction and attention from the user base. And our view on this, and the reason why Portal exists, is we want users to be chain agnostic. So you may want to keep all of your money for a long period of time in Bitcoin because it is thermodynamically secure and it's the most trusted chain, but it's not very expressive. So you may want to do a lot of interesting contracts and complex contracts on Ethereum or other chains, but you want to have a seamless intermediary between the two chains, but you don't want to have a trusted intermediary. And that's the problem we're solving. So do anything on any chain with any asset that you have, but you don't have to go through custodians. You don't have to go through security holes. You don't have to go through layers upon layers of complexity that you can't really understand, that puts your capital at risk. So we think that really helps the DeFi ecosystem.
Yeah, I mean, the entire ecosystem has grown in this cross-chain constellation-like format where, you know, you've got all these different pockets of I guess just capital resting in different places. And I like to kind of think of it as like homes, like a home base. You know, you've got kind of like Ethereum is like the Manhattan. I've read an article about how Ethereum is the Manhattan of DeFi. And then you've got all these different kind of suburbs and places where people choose to put their capital and almost exist. And Rob and I both consider ourselves kind of like citizens of Ethereum. Like, you know, I've been in my home country for 6 days this year, right? Like truly, where is my family? Where is my life? It's all on the chain. It's all in this kind of digital world. So I'm curious how you guys have taken this, like this mental model of this, you know, perhaps if you shared this constellation idea or kind of what your mental model is for the current landscape of DeFi. And let's just start there, and then we'll kind of dive into where Portal fits in, and, you know, further there.
Sure. So we think about this as each blockchain as a specialized system that takes a lot of trade-offs in furthering just one objective, right? Bitcoin is stack-based, very simple primitives. You can't write complicated contracts on it. And the reason for that is you want to have security as topmost in your priorities, right? You want to make sure that none of these contracts have attack vectors that you haven't thought about. You can pretty much easily reason about the functioning of any contract or anything you put on chain, basically, any script that's on chain. Ethereum takes a slightly different approach. It wants to be way more expressive. It's Turing complete. You can write almost any contract you can imagine on there. Bitcoin makes trade-offs for the sake of security, like speed and transaction fees. Proof of stake chains take the other side. They want speed first. And you can't get the proof of work security on there, but you can have a lot more transaction throughput. Other chains take Web3 as their primary objective and sacrifice other things. There's all this talk about the trilemmas and how some chain is able to solve all three of them. It just isn't going to happen. We think there'll be a lot more specialized blockchains, each one specialized for performing a specific function. And as a user, then you have mental transaction costs, right? Like, what do? You have to have the security and the soundness of the moneyness guarantees of Bitcoin. But you also want to have the utility and the functionality of Ethereum. You also want to have this additional, Web3 NFT stuff that's going on. There's another chain that's specifically for in-game goods. So you, as a user, shouldn't be able to, or shouldn't have to, know the particulars and details and the security models of each chain before you actually get to use the utility of all of those. How do you do that? First, let's start with a simple thing. You have Bitcoin, you have Solana, someone else has Ethereum, someone else has another chain, asset. We all want to have a seamless way to trade in and out of all of these assets, right? Right now, you could do that on centralized exchanges, but centralized exchanges come with their own set of custody problems, privacy problems. They could collapse, they could put your capital at risk, all of that stuff. So first is being able to seamlessly swap each asset into another, and then do whatever it is, stake, liquid staking derivatives, whatever else it is that is happening on that other chain. But always bring back to whatever you consider to be your unit of account, which for most people is Bitcoin. And eventually, as the friction between doing all of those things goes down, our thesis is that all of these other application-specific chains become layers on Bitcoin conceptually. They basically specialize in performing one thing, but all of your settlement happens on, and storage and long duration asset value resides in one chain.
So is that hyper-Bitcoinization?
Hyper-Bitcoinization is a little bit further away. This, we think, is the road to hyper-Bitcoinization. So let's first just define the terms. Hyper-Bitcoinization comes from a Nakamoto Institute, guys. It's basically a speculative attack on fiat currency. When you have a superior currency, eventually people start using the inferior currency. They dump it like hot potato, and all their savings are accumulated in the superior currency. And after you reach a critical mass, because currencies have network effects, you continue to use whatever it is, the Argentine local fiat, or for a period of time. The velocity is very high, and at some point, everybody starts doing their profit and loss statements or a unit of account becomes a superior currency, and then you completely discard the inferior currency. That's the thesis on how Bitcoin replaces fiat currencies. But for you to be able to get there, you have to have many of these speculative price spirals that you've seen. 2012 was one, 2017, 2020 to 2021, and each successive spiral will be larger than the last one, draws in more people and capital, and because the supply of Bitcoin is fixed, you'll continue to see more and more of these, and at some point, eventually fiat currency, a fiat currency, or many fiat currencies get replaced. So that's the path to hyper-Bitcoinization. But to get there, you can't just speculate on or trade Bitcoin against Bitcoin. You have to have other things. And we know that fiat gateways are at risk of being closed anytime. So this is the crypto gateway to trade all other blockchain assets against Bitcoin and back is a necessary step, intermediate step to hyper-Bitcoinization.
Interesting.
And hyper-Bitcoinization, like the path to that is obviously not a straight and narrow path, right? It's a winding path.
No.
So how do you, like, what is your path to hyper-Bitcoinization? Are there other like kind of checkpoints along the way that you see as goal destinations for Portal and the industry as a whole?
So for us, it is to create, so it's hard to predict where the next wave of adoption will come from, right? DeFi, nobody could predict that. NFTs, nobody could predict that. Web3, nobody could predict that. Now, I think the next big two things that we can see, or at least reason from here, are in-game goods, right? And real-world assets being tokenized. So it's hard to predict where the next thing will come from, but if you build the infrastructure for those next things to be built, you have a universal adapter for whatever it is that other developers can dream of. And all of that brings more and more users, adoption, capital to the ecosystem. And at some point, this economic system becomes self-sufficient in the sense that it's an intrinsic system. It doesn't depend on a whole lot of fiat moving in or fiat moving out. And then it grows and grows and then becomes larger than TradFi. To your question about, do we see some milestones along the way when? It's hard to tell. It's hard to tell. Now, I'd be lying if I told you we know what the future will be. But these are all enabling infrastructure. So it's like thinking about how would the internet evolve in 1999. It's really hard to say. But the enabling infrastructure will produce, like, as they say, 𝗵𝗶𝗴𝗵 -𝗋𝗂𝗋𝗆.
We had a founder of a bridging protocol on recently, and he mentioned it was Arjun from Connext. I'm not sure if you're familiar. And he mentioned
I'm
that.
sorry, who?
It was Arjun from Connext.
Arjun. Connext.
Yeah. So
Connext. I think I've heard the name. Yes, for sure.
Yeah, Connext with an X. He mentioned that in his perspective, all blockchain applications are inherently infrastructure. And this is a perspective that I've continued to think about since he said that, because we can see that users in general, these normies, if you will, are not excited by blockchain or decentralization. They like the benefits of it maybe, but
Correct.
I think right. So there's a sacrifice that we're making for decentralization and blockchain. And the sacrifice, the trade-off is the UX. And what we're finding is that the UX is too sophisticated and it's not seamless enough to be intuitive or familiar to these users who are accustomed to Web 2 types of applications. So I also hear lots of similarities between the kind of perspective you share about infrastructure in the space, because it is very difficult to predict what the normies will like. So I'm curious about what your perspective is in this regard about building applications or building infrastructure. Do you think it's important for everyone to continue to build this infrastructure, or ultimately what in your perspective is important for the builders in this space to be building?
That's a great question, and it's not only important at this moment in time. So usually, the way we look at it is, we build infrastructure, they will come, never worked and never will. when you're building infrastructure, you have to have some use cases and some users that want that infrastructure, correct? And it's a codependent relationship in the sense that the apps, the end users, the application developers, they have some needs. Presumably those needs come from them being very much in touch with their user base and what they want. And so that actually feeds into the design and architecture of the infrastructure that you provide. There's always an end customer, whether that customer is an app developer or whether that customer is an end user, you refer to as an army. There's always a customer that wants a job done, right? They don't care about the magic under the hood. At the end of the day, users want and care about what needs it solves for them. And then it's up to the app developer to pick the best infrastructure layer to deliver on that promise for their user base in the most efficient, profitable way. And it is the infrastructure provider's job to actually build out the best-in-class service to support those application developers. So if you are coming new to the space and if your question is, should I build infrastructure? Should I build an app? I would say you should start with the user first. Who's your end user? What is the problem? What is it that you're solving? When we talk about in-game goods, I mean, people, these are existing markets. People exchange in-game goods, even though the game developers don't like it, right? They try to trade accounts, they try to swap goods for some sorts of currencies. It's almost a black market in the sense that they do it without the explicit approval of the game developers. So the need is there. What do these in-game goods represent? They're not just JPEGs. Assuming that the logic of the game engine is verifiable and consistent, it's some work that somebody has put in to earn those rewards, right? So they have some value. All value is subjective. They have value because I've put a lot of skill and time and effort to earn them, and you value them as well. And so we're trading. So if you're building something, I look at it from that perspective. See where the needs are, see where the market is, see where you don't have to create a market. The user needs already exist. And maybe you can decide that, you know, the app space is crowded. I need to solve this infrastructure problem for all these app developers. Or you could say, hey, no one's built a killer app. Let's build a killer app. The need exists. And then pick the best infrastructure. But the question shouldn't be A or B. The question should be, what do my users need? Or whatever the target segment is that you're going after.
Yeah, that kind of brings me to another point, which is like, there's definitely some challenges to onboarding users and kind of scaling DeFi, you know, with the security risks and also just the educational side, which, you know, we kind of tried to tackle. But, you know, these and outside of these, kind of what are some challenges that the entire DeFi sector kind of faces, and, you know, how are you guys at
complexity and UX
kind of overcome them?
Right. You brought up a good point about complexity and user experience. So if you're a diehard enthusiast, so this all goes back to how technology adoption happens, right? Diffusion of innovations. So there's pioneers, early adopters, and then you go through the valley or the chasm to get to the mainstream, right? Like to you know, laggard, all the way up to the laggards. Each step of the way, you have to improve your user experience and benefits. So the first wave of users will tolerate a lot of nonsense, right? They can go to this bridge, download this wallet, right? Go to a fiat gateway, wire transfer some money, buy this coin, transfer it to that other wallet, and then put it in a bridge, get these other things, go to some other DeFi protocol, stake it. They go through all of those hoops because they are the pioneers and early adopters. That doesn't translate to mainstream. That never does, never has been. And it's not just software, anywhere. So every step of the way, you have to keep improving your unique value proposition to the bigger pool of users. So our goal is, what are the best UX? What is the best UX in the space right now that anybody can use? Centralized exchanges. I mean, they have a lot of other problems, but because they're Web 2 products, they're very simple. they meet all of the user expectations of usability, functionality, reliability, all that stuff. So that's the gold standard for that.
Could we talk about account abstraction? Because I think this is a key piece of the user experience layer that is maybe holding the industry back from a killer app. Have you experimented at all with account abstraction? Do you think this is a legitimate gateway to mass adoption?
I'm not very familiar with that term. Can you tell me a little bit about what you mean?
Yeah, I can try. So as account abstraction, as I understand it, is a form of generating a set of Ethereum private keys that are not exposed to the end user, meaning that there is someone else, maybe a third party, or maybe the keys are split up across a number of parties. Now, once those keys are generated, they can serve as an Ethereum account, and then you can deposit money into them, and you can interact with your account as if it is a smart contract. That enables the end user to then pay other current, it enables the end user to do a variety of things. One of which is pay different currency than the native gas currency. For instance, Base could run a campaign that onboards users with account abstraction, puts one USDC in their wallet, and then they wouldn't need any Ethereum to pay gas transactions, even though it is running on the EVM, for instance. Or they use OP Stack. So that, so at a higher level, right, you could pay gas with any currency.
Right. So you're basically talking about, is there an AMM or equivalent under the hood that actually pays the miners, converts and pays the miners with these currencies?
Yeah. So I'm thinking about how we can leverage account abstraction to onboard the masses, and give the masses a Web 2-like experience with Web 3 under the hood.
Right. So several elements that you mentioned. One, distributed key generation we use at Portal, right? That we do. Two, is the biggest problem right now to doing transactions having Ethereum to pay for gas? Yes, absolutely. If you only have USDC, how are you going to transfer it, right? For the Portal DEX network, you actually can pay in the native currency. It's a cross-chain AMM, so that solves the problem of exactly what you're talking about. So you want to trade your BTC for ETH. You don't have to have any ETH. You can pay your native fees in the currency that you have. There's obviously an exchange rate that floats, and that's a big point of friction. Vice versa as well. So that's the beauty, and it's also the difficulty of building a cross-chain AMM, is in the sense that any user with any currency can interact and transact and pay their fees in the currency that they have. They don't have to buy something else. Like I described, go to a fiat gateway, buy some cash, do a bridge, a stake, on and on and on. Yeah. And at the end, many of them forget what steps they even took to get there.
Andy, you're on mute.
I think the key thing here is that the abstracting away the complexities in the cross-chain world is huge. What's the kind of TLDR on the Portal swap feature? Kind of how is that going to work? How is that going to make the user experience easier? What kind of capabilities will that unlock?
Sure. So there's 2 or 3 ways of doing cross-chain transactions, right? One is you have some trusted thing like a cross-blockchain transmitter, basically, that reads a contract on this chain, and whatever is revealed, the state is transmitted to a contract on another chain. They don't directly communicate with each other. There are things like layer zeros and IBC and all these things. The problem with messaging protocols is that they're very limited, and the chains don't have any binding to them. So you're basically introducing another layer of trust, whether it's centralized or decentralized. between these different chains. 2 is to use a centralized custodian, right? Sexes and stuff like that. 3 is atomic transactions, which is a transaction that happens on this chain or a state change of a contract on this chain depends on a state change or some event happening on another chain. And that binding is very strong. It's it basically guarantees atomicity in the sense that X only happens if Y happen on another chain. The problem is atomic swaps is a new concept. It's not a new idea. They've been there for a long time. They require actions to be happening on layer 1, right, on the base chain, which takes confirmation cycles, fees, transaction fees, gas, etc. We move all of that to layer 2. So instead of the base transactions happening on layer 1, all of these swaps and intra-chain transactions happen on layer 2. And the recording of that is actually abstracted to its own chain. That's the portal network, the portal chain. So that way you get speed, you get low transaction fees, but then you get strong security properties that you want to allow the functionality that users want. And then that's basically the pyramid, right? Like that's the unique value proposition. And then you get to your feature set and then the user experience. It all feeds from that functionality. So we've taken the atomic swap way right from the beginning when we looked at all the other different ways of doing inter-blockchain communication. And we've decided on this. If there's only 2 security assumptions, if you trust the underlying chains, right? The game theory will take care of the rest. Security.
So are you guys using the canonical bridges or what's the bridging mechanism?
We don't actually use bridges. That's the thing. We don't like bridges and we don't like wrap assets precisely for this reason. Because a bridge, you can decentralize it to some extent, right? It's basically I hold X asset that you send me. Maybe not I is like multiple parties with some consensus mechanism, et cetera, and then I send you or sign a transaction that sends to your wallet some other address with the guarantee that the peg will always be maintained and the redeemability will always be maintained. That's not true. Empirically, that has proven not to be true. Just the 5 biggest bridge hacks in the last year or 2 cost the user about $1.3 to $1.4 billion in lost money. So it's proven not to be true. We don't like it. In this case, the custody of your funds either with you or an agent on the blockchain that acts as well, that you and anybody else can verify. Nobody else.
And so yeah, bridges are trusted, centralized. You can decentralize them to a certain extent, but not fully. And the same thing with messaging protocols. You can't fully decentralize. You have to trust. You can't verify the cross-chain messaging protocol. But there is a link, a binding, I think is what you called it, between the state channel on one chain and the state channel on the other chain, and releasing the funds on the destination chain. It depends on understanding the state of the origin chain. Do you use
or something being revealed on the origin chain? Correct.
Yeah. So to understand those state channels or communicate them to each other, do you use ZK technology or optimistic technology or a unique technology to understand the state or to prove the state of one chain and understand that from the perspective of another chain?
So ZK is more for the privacy, but what we do is, let's say, let's take the example of a Lightning network for adjusting the balances requires us to basically erase the previous states that we've agreed upon, and all that takes is a secret reveal, right? And because of the difference in time locks, I can prove that the previous state is invalid and the balance has now readjusted to reflect the new share of whatever's in there. It doesn't necessarily require ZK, but because most of this is off-chain, right? You could get away with simple encryption, because you're not actually revealing these channel states on chain anywhere, except between the two parties and presumably the intermediaries in the middle. So it's inherently more private than on-chain transactions.
Okay.
Yeah.
I think my question may have sounded like pointing to the privacy, but I think what I'm trying to get at is like how we execute atomic swaps, like how we come to understand the change in state of one chain.
Yeah, so the typical atomic swap is you make a contract with me, right? You say you and I meet. You and I agree to exchange Bitcoin for Ether at a mutually agreed upon exchange rate. And then there's some exchange of public key hash or whatever, right? You lock up your stuff on chain with a secret that only you know, and you pass along to me the hash of that secret. And then I use the same thing to lock my asset on my chain, right? So there's a difference in time locks in the sense that if you take my money, the only way you can do that is by revealing your secret or the pre-image. And then I can take that for up to a duration of time. Only I can take that on your chain and take your money. That's the simplest basic construct of an atomic swap. Right?
Got it. Yep. And then you can because you can, with the pre-image, you can recreate the unlock key, essentially the secret.
Yes, it's basically the unlock key. Correct.
Okay. Very cool. Yeah, atomic swaps are something that, like you said, the concept is new. The idea has been around a long time. Like I was using Shapeshift back in 2016, and so it just brings me back. Like, and I haven't heard.
That's a great UX. I mean, by the way, you know, it's completely centralized, but it's a great UX, right? It's you could even say it's the precursor to AMMs.
Yeah.
From a UX perspective.
Yeah, it looks just like Uniswap V2. Literally. Exactly like Uniswap. I remember Rob and I actually had Eric Voorhees in our university blockchain club in 2017 on a video call with like 20 students just asking him questions about Shapeshift.
Yeah.
See, there you go. There you question about what do users want. Hey, they have adoption, but they had problems. So there you go. That's why AMMs emerged.
Yeah. So what are the problems that they faced? I don't think, we really, I don't really understand. I never really understood.
I think they had some regulatory and legal issues.
Okay.
Mostly.
Okay.
That's my understanding. I don't know anything that the public doesn't know, of course.
Okay. It wasn't a centralization exploit.
That's the thing about
definitely was a centralization.
Yeah, that's the thing about building decentralized tech is, you can get away from a lot of the regulation if you structure your companies right and also just build truly decentralized technology. It's almost like you're building this public good rather than this broker dealer or this exchange and I assume that's kind of the route that you guys are going down.
Correct.
Yeah.
So I'm curious
it's good for the user in the sense that it's sorry, go on.
No, please.
Well, so I'm saying it's good for the user in the sense that there is no central dependence on us as a company, even if and that's intentional. And two, it's good because of legal and regulatory ways in which it is treated if there is no counterparty or custodian in the middle of it.
Yeah, exactly. And I mean, even further on this note, taking this and extrapolating it into this world of AI, what are your thoughts on the intersection of AI and crypto? And let's just start there, because I know that you guys are going to take advantage of it.
Oh, for sure. So we think, so let's say we're past the infrastructure's point and everybody's able to freely use all of these value props of different blockchains from a single interface. It's very simple. It doesn't have a lot of complexity. It's easy. It works and it's secure. Next thing you would want, and this is not just in crypto, but it's also in traditional finance spaces, you'll start to see more and more of autonomous financial agents that reduce your mental transaction cost. You don't have to be stuck to your screen calculating these basis point changes in this or that, right? These autonomous, we call them bots now because they're very limited in scope and functionality, but you can create your own bot with just natural language instructions. It can parse your natural language. It can parse the balances of assets that you have. It can parse through the contract states and understand it. And then you basically have a worker bee that is constantly doing your bidding 24/7. It doesn't sleep. And it's way more efficient than you or any human doing it, right? So we see that as the future. These, we call them agents, AIGENTS. And it wasn't very possible in the past for training these AI models on your personal financial data and then explicitly instructing them, basically writing the code for what they should do. With LLMs, that threshold has been reached. Now you can generate an agent that does a specific thing for you, right? You can give it access to your multi-currency wallet. It goes through all the blockchains. It goes through all of the timestamps on all the transactions. And it can tell you, based on the exchange rates at those times, how you should do your accounting, for example. That's the accounting agent, right? You could instruct it to just trade X versus Y for a pre-specified goal, right? All of those things you could do. The signing would still be delegated to the user. Of course, you can delegate the transaction signing ability to the agent with the guarantee that the private keys are stored on your device. But the more interesting thing is you can actually generate many of these agents, each one with a specific explicitly stated goal or mission. And they all can interact with each other. They can exchange ideas, opinions, strategies, and then the user gets a full recording and control of all of that. I think that's an exciting future. So it's very, very interesting to think about a protocol that enables the generation and communication and coordination of all of these autonomous software agents, and all under user control. This is a very, very weird and interesting world. We don't think we fully understand where it's going to go, but it's going to go somewhere very big.
I love this.
Yeah, I mean, I just wonder, like, real quick, I just wonder, like, if markets will ever be the same after AI. Like, why do we even need markets to trade? Like, human emotion is gone. Like, we just have AI.
Well,
now, like, what are we trading against?
I think the human element will continue to always be there, right? Because it doesn't come from rule-bound system. It comes from somewhere in your mind. The subjective valuations of anything outside of us originates in your mind, and there is no agent that actually has the exact same ordinal preferences that you do. But you can have it be your agent in limited circumstances. And when your mind changes and your opinions change, you can tell it to change too. It's almost like a very tightly bound worker bee, because I don't want to use the un-PC words, but yeah.
I'm going to have like an AI chip in my brain, and it's going to be trading on Portal DeFi as I'm dreaming about the next 100x, and it's going to happen for me when I wake up. And I'm like, I didn't even have to open my laptop today. I'm just going to go for a surf.
Whoa. Probably, yeah. It's or even start with an EEG instead of a chip in your brain, you know.
Andy, that's a wild idea to train an AI based on your dreams.
I wish I had an AI that could remember my dreams for me just to start. Oh man. Getting a bit off track. I do want to keep touching on the AI and crypto intersection. Like, it's gonna happen. You know, I think if you're fading these two industries right now, you're missing out. You're gonna end up you're going to end up out of the loop big time. So, I guess I could just posit a question like what in the current DeFi landscape, what do you think could have, what do you think AI could have the biggest impact on? Is it trading? Is it lending?
It can optimize your portfolio. Sure, all of the above, right? Like I said, you can generate a slew of these agents each with an explicit stated goal. And one could be working on portfolio optimization. One could be working on managing risk. One could be looking at yield. One could be doing tax loss harvesting or whatever. And the beautiful thing is your accountant doesn't need to talk to your trader, doesn't need to talk to your market maker. All of that stuff is happening in the background with hyper efficiency.
Yeah, I love the point you made about decreasing our mental transaction cost, because like these autonomous agents that we're able to train and then they go do the thing, like that is then offloading our mental bandwidth, potentially our physical bandwidth, if it's going to save us time and energy from pushing buttons.
Exactly.
And then it's
like the best part about ChatGPT, man. It's like anything that you want, you don't even have to think about it. You need an outline, boom, done. You need this, done. You need a grocery list, done.
Yeah, this has been a big problem in this space, because people said, oh, now you can pay sub-Satoshi this, or now you could do $2 for a small thing. And Nick Szabo wrote about the real barrier is not the actual economic transaction cost, but it's your mental transaction cost, right? With large language models, your mental transaction costs are compressed to much lower. You don't have to make these decisions. Should I buy this or should I buy that, right? You basically have an agent that understands it and operates at hyperspeed. So efficiency guaranteed. Like I said, how many of us can afford an accountant and a trading desk and a market maker and this and that and the risk manager and a financial planner? They're all living on your device now, on clouds, but they're all communicating all the time and they're all working together for you. And you're basically getting that for free. Can you imagine the level of quantum leap that is for personal finance?
It's hyperscale.
And then it's hyperscale. And then you don't have any of these constraints of, oh, my bank needs to do X or Y or Z, because you actually have this decentralized monetary infrastructure with crypto. So it's crazy stuff.
Yeah. We could ask a similar question to ones that we're asking about blockchain now, which is that like interoperability between my AI accountant and my AI financial analyst is another like big issue. Like how do I? And then I would want. Go ahead.
Go on.
No, please.
So that's the part of the agent module, right? Like in our roadmap. That's the next step. We've already started on it. There's a team dedicated to this. So the goal is to have a common language and a common incentive and a communication system and a coordination system between all of these agents that are working on different chains, doing different things for a user.
In coordination, like is almost built from those incentives. Those are almost one and the same, because and when it comes to incentives, like I would want like these incentives running on a almost like a blockchain circuit for the transfer of incentives here between my AI financial analyst and AI accountant, and especially if they were to then communicate with other AI, my AI accountant then communicates with other AI accountants to make itself better. If there's some payment that has to go from one to the other for paying that learning, like for that education, I would. So is that what you have a team dedicated at Portal to build out this payment channel between AIs?
We call it the coordination system, but it's basically transfer of value, exchange of information in whole different currencies. And if you remember, to be able to do this, you need to have the previous step, which is the cross-chain AMM, right? Then any agent operating on any chain with any incentive structure can exchange with anyone else.
Interesting. It's very interoperable.
Yeah, it's deep. So you hit on the roadmap, and as you kind of come to the closing thoughts here, what is on the agenda leading into the end of the year? How excited are you? Are you doing any conferences? What do you guys have going on?
Okay, so for us, step one is the decentralized exchange protocol with the cross-chain AMM. V0 should be live within a week. V1, we expect our testnet to be live by late next quarter. After the mainnet transition of that happens, then the agent module will be released again in a series of testing and steps. There's already one bot for investments. It actually does both crypto and equities. It's called 𝗵𝗶𝗴𝗵-𝗶. That's one of our products. There'll be many more agents like that, and the agent protocol will basically be the coordination, communication, exchange system between all of those agents for each individual user.
Very cool. And how can our community get involved and participate, use these bots, and use Portal DeFi?
Right now, if you want to use it, you go to 𝗵𝗶𝗴𝗵, spin up your own thing. You can, if you're crypto, it'll only do crypto for you. If you're equities as well as crypto, it'll do both. You can download it. Once the V0 P2P swaps are live, you can test it out, join our Telegram channel, follow us on Twitter. If you want to be a validator for the DEX testnet, there's a validator sign-up form, all of the above.
Sweet. Yeah, I'm definitely going to check out 𝗵𝗶𝗴𝗵. It sounds awesome. And yeah, thank you, Chandra, for coming on the podcast and kind of sharing some really interesting insights about tons of topics, right? Just DeFi and kind of scaling, mass adoption, cross-chain world, layer 2 scaling, all the way up into intersections of AI and crypto, and kind of how we're going to see this ecosystem and this industry scale. So wish your team the best of luck in Stanford Blockchain Week this week. And yeah, thanks again for your time.
Absolutely. Pleasure being with you, Rob and Andy, and you guys have been very happy. So good luck.
This was fun. Thank you. Thanks for coming on.
Awesome.